Hello and welcome to Digital Accounting Education, a channel that strives to make accounting and EMS easy for you to understand. Please don't forget to subscribe to the channel so you don't miss out on any future videos. And comment down below which other topics are giving you trouble. And don't forget to like the video and share with your peers. So let us get straight into today's lesson. It says question 3, journals and debtors ledger. So the information is as follows. When you have your question paper, you have a highlighter in your hand and you highlight the important parts, because if you don't, you're going to forget of this information. So it says R. Dahl is the owner of Dahl Bookstores. He buys and sells published books. The business normally uses a markup of 75% on cash sale transactions. So you need to highlight that. Okay. So you're going to highlight the fact that this store uses 75% on cash sale transactions only. Cash sale meaning whenever they sell on cash, they use a 75% markup on sale. Okay. And then they use 100% markup on credit sale transactions. So when they sell on credit, they use a markup percentage of 100%. So you are required to use the information below to record the transactions for Dahl Bookstores in the following journals and ledger for the month ending May 2024. So it says do not close off the journals at the end of the month, meaning that do not make the totals at the end of the month. So don't total your columns at all. So you're going to do a cash receipts journal, a cash payments journal, a debtors journal, and a debtors ledger. And they are giving you information on the debtors ledger there. They said that you must show only how the transaction dated the 27th will be recorded in the debtors ledger account of E. Blyton. So with your transactions, the first one says on day 3, processed EFT 132 for 6,100 as payment to Goosebump traders. 5,400 was for trading stock and the balance was for printing paper. So as I always say, with a transaction, do not rush it. Understand every bit of it. Okay. So now let us try to unpack it. What they are saying to us is they processed an EFT. Okay. Meaning that they sent an EFT for 6,000 as payment. Okay. So already it is telling you that the business made a payment. Okay. And that payment went to Goosebump traders. So in that 6,100, 5,400 was for trading stock and the balance was for printing paper. So that is the important information in this transaction. So now where do we go? Which journal? We go to the CPJ. Why? Because we made a payment. So we go to the cash payments journal. Here's how our answer sheet looks like. So you go to the cash payments journal, document number. They told you that they processed EFT number 132. Okay. So document number will be EFT 132. The day was on the 3rd of May. Details in the payment journal or the cash payments journal. You write the name of the payee as the detail. So the person whom you are making a payment to. In this case, our detail will be Goosebump traders because we are paying the money to Goosebump traders. So we are paying the money to Goosebump traders. And how much went out of our bank? What was the total that we paid from our bank? We paid the Goosebump traders 6,100. Okay, that is how much went out of our bank account. So what did we actually buy with this 6,100? So with the 6,100, we bought trading stock as well as printing paper. And they told us that trading stock was for 5,400 and the balance was for printing paper. Okay. Since we bought trading stock, you have to show in the trading stock column that trading stock worth 5,400 was bought. And then the remaining amount will be for printing. Okay. So obviously printing, we know that will fall under stationery. So you go into your calculator, you try to find the balance. So 6,100 minus 5,400 will be 700, which means the 700 will be for stationery, which is printing paper in this regard. So we are done with the transaction and then we move on to the next one. On the 11th, cash sales of merchandise according to the cash register roll was 7,000 and the cost price was 4,375. So in this case, we are lucky because they gave us both the sale amount and the cost price. Had they not given us both the amounts, we would have had to calculate the one that they wouldn't have given us. So for example, if they had just given us 7,000 of the sale amount, we would have had to calculate the cost price using the markup. Okay, so now let's try to understand the transaction. Cash sales. Okay, so they are saying cash sales. That is a key word or a key term, meaning we sold on cash, not on credit. Cash. Okay, so we sold merchandise. Merchandise is goods. Okay, so we sold merchandise for cash. Okay, according to the cash register roll, which is our which will be our document. Okay, and then they gave us the sale amount and the cost price. So which journal do we go into? We go into the CRJ. Why do we go to the CRJ? Because we made a sale, or we made a cash sale, meaning that we received money into the business. That's why we go into the cash receipts journal. So in the cash receipts journal, it says document number. So we didn't issue a receipt. This information we saw on a cash register roll. So our document will be CRR. On day 11, details. We received this money from our customers, of which we don't know their names. So we write cash. The amount that we have received was 7,000 because we sold the goods for a total of 7,000. Okay. And this amount went into the bank account. And then we go to the sales. We record the sale amount. For the cost of sale, you have to record the cost price. The cost price of the goods was 4,375. 4,375. Then we are done. Moving on to the next transaction. It says on the 15th, invoice number 39 was issued to E. Blyton for goods sold on credit to him. 2,600. So the invoice number was 39, and then we issued it to E. Blyton, meaning that E. Blyton is the name of the debtor, okay? Since we sold these goods on credit to him, okay? So whenever we sell on credit, we don't go to the CPJ, because in the CPJ is when we go into the CPJ if we make a payment, and then into the CRJ if we receive money. So now we didn't receive money, we didn't make a payment, we go into the debtors journal, okay? Because in the debtors journal, we always record if we sold something on credit to our debtor. So here is the debtors journal, and it says document number. So the document number will be 39, as they said. The day will be day 15. Details will be the name of the person that we sold the goods to, and the name of that person is E. Blyton. Fall will be the data number. So this is the first data, so it's going to be D1. So how much did we sell the goods for? We sold the goods for 2,600. Please remember that whenever you make a sale and the markup has been given to you, you have to calculate the cost of sale. So let us go back to the information about the markups so that we can be able to calculate the cost of sale. So that information that you have highlighted in the beginning of the activity, so the information you have highlighted at the beginning of the activity said that whenever they sell on cash, their markup is 75%. When they sell on credit, their markup is 100%. Okay, so it means we are going to take the markup of 100. Why? Because they sold on credit to Blyton. So now how do we calculate this cost of sale? Okay, so the formula that I have explained to you in the other video, it is now appearing on your top right. Check it out. So it's going to say cost of sale equals to the amount that has been given to you, which is sale amount, multiplied by 100, because we are looking for the cost of sale, divide by 200. And then that will give you 1,300. You can check it on your calculator. So the cost of sale is 1,300, and this is how we got it. So moving on to day 20, it says a stop order for 3,200 reflected on the bank statement as the monthly salary payment of the bookkeeper. So we analyze our transaction. So a stop order of 3,200 reflected on the bank statement. Okay, so this amount reflected on the bank statement that it has been taken from our bank account to pay the monthly salary for the bookkeeper. So what happened is that we made a payment. Whenever we make a payment, we go to the CPJ because we are making a payment. We go to our CPJ, and then document number will be bank statement, because we received or we saw this information of this transaction on the bank statement. This was on day 20. We paid J Rowling, and we paid her 3,200. This amount was for salary. So we don't have a column for salary here, which means we have to go to the sundry account. 3,200 for amount. The detail will be salary. Day 27 says E. Blyton paid 30% of the amount from the transaction dated 15th of May. Receipt number 24 was issued. So now we have to go and calculate how much the 30% of that amount is. So they said he paid 30% of the amount on the 15th. Okay, so you go to the 15th and you check the amount. The amount that he had bought for was 2,600. So to get 30%, you say 2,600 multiplied by 30% or 30 over 100, and then you get your answer. So 2,600 multiplied by 30% equals to 780. So it means Blyton paid us 780. That is the amount. So remember that whenever we receive money, we go into the cash receipts journal. So the document number, they said we issued receipt number 24. And then this was on the 27th of May. Details. So we received money from E. Blyton. Okay. And we received 780 from him. And that amount has to go into the bank because we received it. And then from here, you ask yourself, what was the money for? So he was paying his account. And this E. Blyton was a debtor. Okay. So it means the money we have received was for debtors control. So this is how you record it. So we move on to the next question. So remember that we finished our transactions. We completed the CRJ, the CPJ, and the debtors journal. So 3.1.4 says we must do debtors ledger, and we must only show the transaction dated 27th. Okay. So we go to transaction on the 27th. It says E. Blyton paid 30% of the amount from the transaction dated 15th of May. Receipt number 24 was issued. So in the debtors ledger, we have to show the account of E. Blyton and how much he owes us currently. So this is the debtors ledger of Dial Bookstores, and this is the account of E. Blyton. So they already gave you a date. So under details, you have to say receipt number 24, because that's the receipt we gave him when he paid. So now we have fall, debit, credit, and balance. So on the 27th, what happened is that he paid. Okay. So whenever a debtor pays, you credit their account, because the debtors always decrease on the credit side. Okay. So when they buy, you debit them. So in this case, he is reducing his account by 780 that we already calculated. So it's minus 780. So the new balance for him, remember he was owing us 2,600. So 2,600 minus 780 will give you the new balance. 2,600 minus 780, 1,820. So he now owes us 1,820. That is his new balance. So the last question says the business did not achieve its intended markup of 75% for the transaction dated 11th. So on the 11th, what happened is that they sold goods for 7,000, and the cost price of that. So what happened on the 11th is that they sold goods for 7,000, and the cost price of those goods were 4,375. So they are telling us that, remember, in the beginning, they said to us that when they make a cash sale, they are expecting to make a profit of 75%. But they are telling us that day 11, they did not meet their markup percentage. So you must show calculations to support this. So to justify this question, you have to now show us that indeed they didn't make a markup, or they didn't achieve a markup of 75%. So then what markup did they now achieve? So you're going to try and calculate the markup percentage, okay? You're going to use the formula that I taught in the other video, which I will link down below, and the tag is appearing on your top right now. So markup percentage that we are trying to prove equals to, so you're going to say your selling price of 7,000 minus your cost price of 4,375 divided by the cost price of 4,375 multiplied by 100. Okay, so now you put it in your calculator. You can start with the number at the top, 7,000 minus 4,375. 2,625. Then you can put it in a calculator like this. So 60%. So basically here you are trying to say to us that, okay, this business did not achieve their markup of 75%. However, they achieved a markup percentage of 60%. So this is how you justify it. So this is the end of today's lesson. I hope you enjoyed it. Please make sure that if you need extra help to prepare for your examinations, you text the number down below, and let us help you get a distinction for accounting. I hope you enjoyed. Bye.